You can have a vision, but also are you a doer? Can you turn an idea into execution? And can you execute fast enough? Because if it's just a great idea, believe me, a lot of people can have it, not just you. You have to know how to leverage the tool to step up your game, because when the tools are available, people actually expect more, not less. You can be a thinker, you can be a doer, but can you convince people to believe in you?
Hello, our world. Welcome back to another episode of RWorld Talk. We are joined this morning by Maggie Vo of Fuel Venture Capital. Welcome to RWorld Talk, Maggie. Thanks for being with us.
Thank you, Chris. It's great to be here today.
Well, why don't you start by telling us a little bit about your background and your role as managing general partner at Fuel Venture Capital?
Sure. I have been been in the fund management business since I started my career. The idea back then was, if you want to work with investor, you have to understand different asset class. Because think about, right, if you only know one thing, let's say if you only know about oil, doesn't matter oil go up or down, you only have to recommend people buying oil. And
Sure.
I don't want to do that. So I have working for different fund, managing different asset class from, public equity, real estate, and hedge fund. And right before joining Fuel Venture Capital, I was a global, hedge fund manager.
Okay.
About 7 years ago, I noticed that, there was a trend that a lot of my clients moving away from traditional asset class, going into alternative investment.
Okay.
And as a portfolio manager, it's kind of like, hey, the money is moving. You need to go where
You
the
gotta
money
follow
needs you to manage.
Right.
And another trend happening at the same time, and my belief system is when you have two very powerful trends kind of like cross each other, that's when you want to pay attention. Another trend is, back in the day, around like 1997, you have like Amazon joined the public market when it was very little. It's like 3 years old, revenues and even valuation is in million, hundred millions, right? Nowadays, fast forward, you have company like Uber, like a lot of companies stay in the private market much longer before they join the public market.
Okay.
So what is the consequence is most of the value creation happen in the private market. And if you're a retail investor, if you want to benefit from it, most of the choose we're saying that being, taken advantage, benefiting the investor who can go into the private market. And by the time that the company is joining the IPO or joining the public market, it's already too big. I'm not saying that.
So there's not a lot of money to be made there.
Yeah.
Okay.
You're right. And if you really like, building a models and looking into it, the last time that you actually can create like generational wealth was like back in the day with Amazon. Like nowadays, you don't get that unless you go into the private market. And seeing that those trains crossing each other, I'm like, okay, I have my CFA, which is the most respected, designated, certification in finance world.
Okay.
I have my background in hedge fund. It's time for me to open-minded a little bit. So I came across Fuel Venture Capital. It's in venture capital for space. And I think that I can benefit, the asset class a lot because I was trained in the public market.
Okay.
And I do think my strong belief is eventually everybody want to have an allocation or let's just say investment in private innovation.
Sure.
And I want to be there to help my investor to find a seat at the table. And that's explain why, I'm Fuel Venture Capital.
Okay.
I'm one of the managing partners, also the chief investment officer, managing, like doing due diligence.
That's an
managing
important
the
role.
portfolio. Thank you. I'm sorry for the long answer, but
No,
I
no,
think that everything's in life, we do it for a reason. And if you
Absolutely.
have a mission, you have a passion, you understand why you are there.
Yeah, it seems like every person that we have on the show is always very passionate about whatever role that they've chosen or whatever path that they're on. So it's great to see that not only are you in that sector, but you're really passionate about what it is that you're doing. Certainly that drives a lot of success.
Thank
The Fuel Venture Capital invests in early stage companies, which you've talked about the different classes. So those early stage companies, those are going to be those private investments. These are not hitting IPO yet. This is early stage stuff. So what traits do you look for in those entrepreneurs more specifically and those startups before you invest? We've talked about those different classes and you looking for those different trends, but what is it that you're looking for in those in the entrepreneurs that are starting those companies? And how do you think realtors can apply those same principles in their business?
So, one thing about Few Venture Capital, I didn't have a chance to kind of introduce the fund a little bit, but
Sure.
we are a global venture fund. We have office in Miami, and in Silicon Valley.
Okay.
We're investing in certain sector that we really, specialize in, like fintech. You can put PropTech in the fintech as well.
Mhm.
Consumer marketplace and enterprise SaaS. And obviously nowadays you have to invest in thing with an AI layer on as a technology.
What's AI?
Artificial
I'm kidding. I'm
intelligence.
kidding.
uh, so our job is to, identify companies. I would say that identify tomorrow's Uber, tomorrow's Google, right? And we identify them at an early stage, like you mentioned. We build conviction in them, and we following them to exit. And when I say exit, it's like either going to IPO or selling to another bigger enterprise.
Okay.
And for us to do that, right, to identify those companies, one of the very important factor that you just touched on is the quality of human capital, right? Because company at an early stage, before it's become like a fluid system, the people who running it are very important. The people who are building is very important, right? So when we go through a due diligence, we always looking for a couple things. Um, you know, um, in terms of like a thinker, I think that I would always say that do we have founder market fit? Meaning that um, if you come up with an idea, you have that insight. How is that insight? Where did you get that insight? Because you understand the pinpoint, right? Do you have any, um, thought that differentiate you from the other person, right?
Right.
Call a thinker. You have to think differently a little bit if you want to disrupt something.
Sure.
If you think the same way, it's very hard to go and disrupt something. So it's a thinker.
How much emphasis would you put on somebody who's creating technology that hasn't been in whatever space it is that they're creating technology for? Are you able to put any faith and trust in that entrepreneur if they haven't already been working in a space where they were finding pain points that they're trying to fix? Or do you think that somebody can completely come from a different sector of the business world and say, I am going to come up with a solution for people who who manufacture refrigerators if they've never worked in refrigerator manufacturing?
So I think that to answer this question is two sides of the coin. The reason I'm saying that is, you can always say that, hey, I want to invest in a person that they have always been in that sector or doing the same thing because they understand the pinpoint,
Right.
which we really back that idea. But using, another argument, you can say that because you're in that sector for so long, right? You need a fresh kind of like look.
Okay.
And when you want to disrupt, you kind of like coming in with a fresh look, you disrupt it better. So it's hard for me to saying that this is the formula. This will be depending on, when the founder comes to us and saying that I have an insight. I think this is the way that, the sector or the industry moving forward. And you just have to judge based on, hey, the guy knows about it because he has been dealing with that pinpoint for so long and he figured out how to solve that pinpoint in a very efficient way. Or he never seen it, but he have the pinpoint from another perspective and he
Okay.
feel and he think that there's a way to fix it. So that's why I said that it's like two sides of the coin. I cannot say like this side is
Right.
better or the other side is better. Another thing I think is very important is, you can have a vision thinker, right? But also, are you a doer? Right? Can you turn an idea into execution? Like can you execute a certain idea and can you execute fast enough? Because if it's such a great idea, believe me, a lot of people can have it, not just you.
Right.
So
The chances are somebody else already thought about it that has better resources than you to actually make it happen.
correct. And I always saying that, if you look at somebody LinkedIn or somebody's resume, you can kind of like judge that if they are, they have skill of execution because, a superstar profile, when you look at their LinkedIn, they're always moving up. Even if they're in the same organization, they always try to grow themselves, getting a promotion or doing something different.
Sure.
Because a above average person just cannot sit still and doing the same thing again and again, right? Another thing that's very important is you can be a thinker, you can be a doer, but can you convince people to believe in you? Because as a founder, you need a lot of support, right? First will be, hey, I need funding. I need to convince my investor to believe in my vision. Not just like, hey, I have to convince my customer to buy the product. That's for sure because you need a business.
Right, right.
But then you need the funding. And the last thing I think is very important is you cannot build a company by yourself. You do need a lot of talent. And most of the talents, if they have to quit a very stable job with a very high income to join your startup, you have to know how to sell that vision. So I saying that, a thinker, and doer, and a seller. You have to know how to, have a storytelling skill a little bit. I think the last thing is just like resilience and commitment, just because building a company's entrepreneurship is hard, right?
Hard.
It's not like a straight line. Sometimes you probably get there, but you have to, go up and down a little bit. And every time like something punch you into the face, can you, bounce back? But that is the resilience and the commitments that we want to see. So we actually spend a lot of time with founders before we write the first check, not just like asking about the business, but really like, understanding, their personality. Are they fitted for the life of, entrepreneurship?
Right. Yeah. What are you going to do? How are you going to sell it to me? Who's going to do all the work in order to get it to this point?
I have a list of things, but those are, like if you had to summarize, those are key
Mhm.
points.
So many of our realtors are entrepreneurial. Obviously, every realtor is running their own small business. So we're often looking for ways to diversify our income. So, from your perspective, how do you think real estate professionals can begin to start thinking like investors?
I do think that, if you want to think like an investor, um, investor always thinks in terms of, like you mentioned, right? Diversify, right? Diversify from the income, right? If you are real estate agent, you probably, making money by getting commission. So that's one kind of, income. Can you create different kind of income for you? Because that's just called leverage, right? Just you. But can you, make money from rental property income? Can you make money from your earned income, the commission? Can you make money from capital gain? And obviously investing income, which is very important. An investor, the mindset of investor is they don't focus of just the income. They don't own the income. They want, if they have an income, they want to turn that income, putting in certain asset, and that asset will appreciate over time. And I'm assuming that a lot of real estate agent that they probably understand that concept because they probably put money in real estate already. So that's an easy concept for them, to understand. But diversify is important. Leverage what you know. Don't lose into something that you have no idea. It's quite important.
Those are good ones. I would give you guys a tip for how to think like an investor. Don't get a $2,500 a month car payment because you think that's going to help you sell luxury real estate. Maybe you should go and get yourself a little smaller car payment and start investing in real estate and start building your portfolio. That'll certainly help you think like an investor.
Yeah, and
Don't spend so much.
think everything in terms of, an ROI. What is the return?
Sure.
What is the financial goal I want
There's
to
no ROI on the car payment.
Yeah.
So, if a realtor wanted to move to beyond just selling properties and really start building their portfolio, where do you think that they should begin? Even if it was something like investing in a startup, is it possible for the average realtor to get into that game if they find a product that they think is cool that they like? Are there possibilities for our average member to be able to go and invest in a startup like that?
Yeah, I think, going back to my comments earlier, right? If you only know about one thing, you tend to put on the X in that basket because you overconfident about that. So I would assume, someone as a real estate, maybe they just want to put money in real estate or
Sure.
anything related to it.
Mhm.
My advice, because, coming from the background that, I described earlier, um, when you want to diversify, when you want to start building a portfolio, you need to understand your goal and your risk profile, but then asking yourself, what is the goal for capital appreciation and capital or income generation? There's certain things, and then real estate agent, they manage their own business. They understand that there's certain income that they need to set aside so that they have money to cover those expenses.
Like taxes at the end.
Or, any expand that they because, with the commission, I will assume that they're very volatile. So, you have to like kind of like set aside those kind of like income needed. And then another thing that's very important is now going back to, the private innovation investing. Nowadays, when investor build a portfolio companies, they don't just looking at, stock and bond. You heard the word 60/40 a lot,
Right.
like stock and bond.
Yep.
We always advise people that, the difference between public market and the private market nowadays is just the liquidity,
Sure.
right? And if you think that you built enough capital that you don't need it immediately, why don't you put it in the private market so that it can benefit from the value creation, right?
Sure.
The long term,
That generational wealth that you.
yeah, the generational wealth, because there's no point to get to put it in, a liquid asset if you know that you don't need it, especially nowadays with the markets. It's pretty volatile because someone says something or because certain policy.
Right.
We even think that putting money in the private market and driving the AI-driven innovation is even a better idea. So, when we advise people, say, hey, think about more like a capital appreciation versus income generation. And then
Right.
in a capital appreciation, you will have equity in the public market because you need some liquidity. And then you have private equity and venture capital.
Sure.
Like the percentage, like let's just say the allocation depending on the liquidity you need. And on the side of income generation, you will have, fixed income, you have rental, income from property, and then put some in the private credit. Maybe you can earn a little bit higher yield because when you're willing to trade for liquidity, you probably get better return, better yield.
Sure. Yeah, it's PropTech and FinTech have been taking off for quite some time now. This isn't anything brand new. This has been happening for years, and people have made a lot of money on it. But you're right. Somebody could say a word like tariff, and you see that on the news. The market's tank. I know a lot of people that lost a lot of money in those in that public market, the stocks and bonds. Everything went down, and took a bit of a beating. Thankfully, things are coming back up. But if you were in that prop tech fintech space, there's no tariffs in that space.
Yeah, and especially, right, we are busy with our work every day. We're not staring at the screen every day to really know that the stock going up and down like a trader. And also most of the stuff right now being moved by, machine computers,
Right.
right? So that's why we're saying like keep whatever you think that you need in a public market, move it to the private market. And, we can get into the conversation with AI later, but AI platform ship is shut a unique you know, um, TAM for you to take advantage of it and move the money in the private market.
So let's talk about that because that's what we were going into prop tech, changing everything from how homes are being bought and sold to how agents interact with clients. So, what are some key prop tech trends that you're seeing that could impact the day to day business of real estate professionals, and particularly AI, like we talked about as well?
Yeah, so I think that there's a lot of like disruptive trend across different segment, right? So if you talk about like let's say AR, VR, 3D walkthrough, AR staging, right? Nowadays you can see that a lot of people can take advantage of those technology
Mhm.
to show the property much faster. And with buyers, they can imagine how they buying furnitures, and I think according to McKinsey, they're saying that, using those tools actually allowing, I think like the conversion rate much faster in a shorter time frame, just
Right.
because that, and even with real estate, right? You don't have to kind of like limit yourself in a local area anymore. With AR, VR, and 3D walkthrough, you kind of like being able to expand to your international
Sure.
buyer, which is a great thing.
And
Uh,
just one second for anybody who's not understanding AR and VR, we're talking about augmented reality and virtual reality.
Correct.
Okay.
Yes. Thank you for that.
No, I just wanted. I know some of our listeners. I know a couple of my agents right now are going, "What is he talking about?"
Yes, and I think another way is like, a lot of people, a lot of founder figure out a way to like disrupt, like the financing way for people to own house, like fractional ownership, right? Of things.
That's big.
Uh, yeah, and allowing people, to own house, but with smaller amount of capital. I think that is important for a real estate agent to look into it because if you know how to help your buyer to buy, certain property with less amount of capital, you actually open a completely new segment of buyer for your, like clients for yourself.
And there's another income stream like we were talking about. Move into that space. It doesn't have to be only focusing on clientele that wants to buy single family homes for them to raise a family in. It could also be somebody who maybe can't afford the new prices with the increases in property values that we've seen through the pandemic, and now still, 5 years later, we're still looking at prices that are quite unaffordable across the country. But that fractional ownership for somebody who's maybe thinking, I don't know if I'm ever going to be able to purchase this home, but they could buy a fraction of
Correct.
a house that's on the market and still reap some income from that.
Correct. And that's the concept different between, like you say earlier, right? How to think like an investor.
Mhm.
It's a concept of like owning an asset. And that asset is going to appreciate in value instead
Right.
of like, making an income by going to work every day.
Right.
Another trend is, you mentioned about AI. Obviously, a lot of people leverage AI nowadays to provide a better customer service so that they can provide 24/7 customer service to their clients if they have any question. And then leveraging AI to, produce their marketing content, more targeting to certain people. And if they work with clients, knowing their preference and their behavior, you can use AI to match with the property you think that they're going to like and recommend it. So there's a lot of like different ways to leverage AI to help their business as well.
Sure.
Um, I think the last thing is like a smart IoT. I think it's pretty smart. Like nowadays, think about back in the day, you had to really go into a house and then you have an agent there and open the door. With the smart IoT, you literally can, leverage the technology, setting up the house at, at the right temperature, right? A
Sure.
very secure way, and then make the customer journey, or let's just saying that the buyer's journey, walking into the house, feeling like this is the house I want.
Right.
You had to leverage those smart IoT, and you don't have to go to that house to set it up. You can
Right.
leverage the technology. There's a many way to really step up your games. That's what I'm going to say.
Yeah, even builders are using that now. I went to show some properties in new developments in Port St. Lucie, and when you get to the project, there's a QR code on the door for the model units that they had. And just a few years ago, if you were going to look at new construction, there would be a representative in each one of those homes, and that's how they would spend their day, just waiting for somebody to walk in and said that they were looking to purchase new construction. But now, as an agent, you can go and take your clients, scan the QR code on the door. You're going to log in of who you are, and it's going to give you a door code, and the door code changes for whoever it is that's going in to look at the property. So I thought that was very interesting because they only had one person on site. It's going to save the company a lot of money, as opposed to employing all of those people to be basically doing open houses every single day. But that was a self-guided tour. You just go and show up and go and look at the houses and do it all with your smartphone. Can you share any insights into how someone with commission-based income, realtors mostly, can build long-term financial stability and wealth?
I think the way you want to look at things is when you want to learn about something, you want to go and learn from the best, right? That's we only believe in life. And when I go out and advise, our private clients or real estate agent, I went back and look at the institutional investor. The reason I'm saying that is institutional investor, or you if specifically, you can look at the Yale endowment. They have figured out a way to build generational wealth, or a lot of wealth for a long time, meaning that avoid owner volatility. So if you look at their portfolio allocation, they have changed. Let's just say like disrupt the way that institutional investing, meaning that they move away from the traditional asset like stock and bond, like I mentioned earlier, moving to alternative investment. Real estate is one, but one thing that they took advantage a lot is in venture capital,
Okay.
right? Because they want to benefit from the long-term innovation cycle and the value creation that I mentioned. Because if you think from the how perspective, right, you investing in a real estate because you can generate some rental, income, and also thinking that you can get some capital appreciation. But the house, is still a house.
Right.
There's certain cap that,
A tangible asset.
yeah, but, and also there's certain cap. I'm not saying that there's some unique cases, but there's certain cap that how much the house value can appreciate.
Right.
But with startup company like we experience, right? Yeah, Meta, Uber,
It could be
Road.
explosive growth.
Yes. because there's a lot of money feeding into that to feed the innovation, right? So we're not talking a percentage return anymore. We had to use the word like multiple returns,
Yeah.
meaning that in multiples, right? And if you look at, I referred to Yale earlier, because they're doing that, right? They was able to generate like, I think 13% in like 39 years, like every year 13%, right? And if you combine them, it's a 125x. It's a lot,
That's a
right?
lot. Yeah.
And the reason I bring them up is because in one of their report, they're saying that majority of their return is because of the large distribution during the internet booming. And why I'm saying that is because to us, we do believe that AI is another platform shift, just like the internet, right? And institutional investors have been very long time understand that and took advantage of it. But now it's deja vu again. There's another platform shift, and it's going to happen much faster and more intense. And we as a few venture capital, one of our thesis that when we built the firm is we want to democratize this asset class to our private clients, meaning, the retail investor, not just the institutional. Sure, we coming out very strongly. That's even I'm here today, is we want to make sure that everybody understand that when you build a diversified portfolio, making sure that, you allocate 5%, 7%, 10% to the future. It's not a lot.
Sure.
It's actually not a lot if you think about it, right?
Right.
You invest in the future, and venture capital is the only asset class allow you to invest in the future, right? And the AI should accelerate that demand.
Sure.
Should you're using AI every day. You're investing in something you
Even if you don't
every
know
day.
it. Because that now when you jump on Google, you're using AI.
Yeah, and then talking about real estate agent, right? I'm for sure every day. I know that you leverage AI to streamline your workflow.
Mm.
That's just kind of like enhance efficiency, right? That's just one thing. But then you can leverage AI to increase the value proposition that you offer to your clients.
Right.
Meaning that nowadays, I think in the future, because AI help us with a lot of like efficiency and research, most of the thing that adding the most value is the relationship driven. And even AI allowing you to do that too, right? Because you can personalize your product a little bit, matching with what the clients, want. And the most important thing I think is very important for real estate agent is, you want to leverage the AI to turn yourself into a trusted advisor of clients.
Right.
Instead of just like a transaction facilitator.
Right.
Right? Because if you
And your customer's using AI. So if you're not using AI, they're coming into the game smarter than you are.
That's the conversation we say earlier, right? Because to them, when they come and buy a house, they're probably doing a lot of research using AI because the tool is just so available.
Yeah.
And if you are the one advising them something, you should definitely leverage it to enhance your efficiency, but also to enhance the value proposition that you can offer to your clients.
So there was some important stats I think that were really fascinating that we were talking about off camera before we started this. But you said it took 18. It took 12 years
Yeah.
for Amazon to get to 100 million users.
Yes.
And then it was 6 months, 6 years for Uber.
Yes.
And how long for AI?
For OpenAI, it's only two months.
2 months to get to 100 million
Yes, to
users.
100 million user.
So things are changing.
They're changing very fast. It's actually the world is changing very fast. And the advice to everybody in every firm, even the companies that we invest, or even in our firms, right?
Right.
You have to improve the AI literacy. You have to know how to leverage the tool, like I say, to step up your games.
Right.
Because when the tools are available, people actually expect more, not less.
Right. Yeah. I mean, my goodness, think about Uber. When Uber first came out, you were getting in the back of a stranger's car, which felt super sketchy, really weird at first. But look at Uber now. I mean, a publicly traded company, it's worth like tons and tons and tons of money. But when you think about how even just something like Uber has advanced, because we went from getting a ride to go somewhere, a rideshare program where everybody's got a chance to tap into this thing, to now they'll actually like deliver liquor to your home, which traditionally you needed your cousin Bob to come and do. But that's just, it's so strange.
One thing actually very interesting about Uber that we were just talking. Uber went public around, I think, 2019, and not until 2 years ago, you actually, whoever buying stock, right? Not until 2 years ago, you're actually making some money by
So it
buying
took
the
that
stock.
long.
Well,
Now what?
my point is most of the value creation, most of the turn, most of the gain is happening in the private market.
Right.
An investor, whoever, got a chance to invest in Series A, Series B, which is an early stage, are the one benefit from those exponential growth. And that's going back to the reason why I left the public market is because I want to find, the opportunity for the investor that I serve. Going back to the value proposition, right? Technology have this democratized everything, right?
And that's Series A, Series B. Those are even later stages in the investment because before you get to a Series A, there's already investment that's happened before then.
Yes, A and B we still define as an early.
Yeah.
Before A and B, I mean, just to get
Those
to
called
like
angel investors.
angel is like the first check, right? And then you have pre-seed, and then you have seed, and then when you have seed and A, that's when the VC, the institutional investor, getting into, and then for the company going to the public market, they go A, B, C, D, E, F.
Okay.
Because it's require a lot of funding to build shut a disruptive company like
Right.
we were.
And by the time you get to F, you got some finances behind you. So, what are some red flags on the other side of the coin? What are some red flags or pitfalls that maybe a professional should avoid when they're exploring those venture type investment opportunities?
Well, I think it's very important that you have to have a proper due diligence in every investment that you make, right? The things that if you have your knowledge in real estate and you knowing the market trend, if you invest trying to go into something that you actually know, right? Hey, leveraging, the PropTech or the AI tied into the real estate market instead of like going to like quantum physics or something that you have no
Right.
idea. I mean, even if you want to try to do due diligence, you probably have to have professional coming in. I think one thing is very
A
important.
trusted advisor would be important.
Yes, and or institutional investor like us that have the scale and have the resource to do a proper due diligence. That's why I always saying that people think that they can just write a check and give it to the companies, and then walk away, and then 8 years coming back and collecting something. It's not that easy. There's a lot of work that we're doing behind the scene, making sure that the companies can scale to a certain level and then exit. Another things red flag is making sure that you're not being driven by FOMO. Right, everybody, even when we make our incomes through commission, certain months if we make more, we tend to spend more. Certain months we make less, we tend to spend less. I think that avoiding all of the psychological bias, right, doing something just because somebody doing that, or FOMO, afraid that we're missing out something, is something we always have to kind of like have our guard up. And that's why as an institutional investor, we always have to have models, making sure that we're not seeing the stock going down and we sell.
Right.
And when it's keep going up higher and higher, we
It's
we,
too
we
late
buy
to
more.
buy GameStop. That ship or DayStop, right? That
Yeah.
ship already sailed.
So emotional investing is something that you want to make
Terrible
sure.
idea.
Yeah.
Okay. Well, we're going to let you get back to doing what you do best and supplying that venture capital and making those investments. But we ask all of our guests on the podcast if you can share with us a hidden gem in Florida. It could be a local dive bar, a beach spot, a park, a restaurant, anything that you love about this area.
Um. Well, the hard question. I have to think about it. The reason I'm saying that is I work 24 hours sales. I don't go out a lot, but I think okay, so I was born and raised in Vietnam. I didn't get a chance to talk about that. I actually came to the US about 20 years ago.
Okay.
Built the career that I'm building here by myself. I'm an entrepreneur, but as a Vietnamese person, always love Vietnamese food.
Okay.
And it's, to be honest, we don't have a lot out here in
I
Florida.
love Vietnamese food, so I'm so excited. I don't know what you're gonna say, but let's go.
So the one of the place that I normally go and get pho, which is the popular is Pho Bar Kitchen in Davie.
Okay. What's it called?
Pho Bar Kitchen.
Okay.
Yeah, to just like to get pho. The reason is, I live in Boca Raton. It's not too far to go to West Palm, but I work in Miami.
Okay.
So, Davie is just
Davie's
kind
on
of
the way.
like in the middle, right?
Yeah.
And it's a place that for me to like, once in a while, comfort food.
Yeah.
Someday that you have a very tough day, you need to remind yourself that why you're here, what you're doing, and try to get some comfort food from pho.
For sure.
So that's what I go there.
Fantastic. Well, you know what? I know a lot of people that are going to love a new place to go get some Vietnamese comfort food. So thank you, Maggie, so much for being with us. You gave us a wealth of knowledge. And if anybody wants to have a further chat with Maggie, you can reach out to her at Fuel Venture Capital. And that being said, thank you guys for listening. And we will see you right back here next Friday, 8 a.m. on RWorld Talk.